Hello ladies and gentlemen, my name is Phil and welcome to Grounded, the series which looks at airlines of yesteryear. This episode will take a look at the rise and fall of Canada 3000. In 1988, the UK-based Owners Abroad Group acquired a large stake in the Canadian travel company International Travel Holidays, or ITH. Owners Abroad had recently launched its own in-house airline, Air 2000, and then established a new airline, Air 2000 Airlines Limited, in Toronto. The idea was simple. As the British and Canadian holiday markets peak and trough at opposing times, the UK airline could deploy its surplus aircraft to serve the Canadian market during the quieter UK holiday period. Traditionally, the UK market is at its peak during the summer months and quiet over the winter. In Canada, it's generally the opposite, with most demand for holidays taking place over the colder winters. With Owners Abroad acquiring ITH, they wanted to expand the business, and having an airline of its own would give the company complete control over its scheduling and quality of service. Unfortunately for the new airline, it ran straight into difficulty with the Canadian National Transport Agency, as the NTA objected to the company's 25% British ownership. Owners Abroad sold its share to the Deluce family, which satisfied the NTA, who then awarded the airline an operating licence in November 1988. There was one other stipulation, however. The airline would need a new name, but for now at least Air 2000 Airlines Limited could begin operations. The first aircraft arrived in late November when a Boeing 757 arrived in Toronto from Air 2000 in the UK. Flights began on December the 1st, with the first destinations being Fort Lauderdale, Montego Bay, Cancun, Acapulco and Grenada. The aircraft was in the Air 2000 livery, which was predominantly white with a red and gold band running from the forward door towards the rear before swooshing up onto the tail. The Air 2000 titles were featured prominently on the tail as well as the forward portion of the fuselage. To denote their Canadian assignment, a maple leaf was added to the fuselage titles. The first of the airline's own Boeing 757s was delivered in May 1989. It was flown from Seattle to Luton in the UK for seat installation and is seen in this one image wearing its new Air 3000 titles. Unfortunately, the National Transport Agency weren't keen on the name Air 3000 and insisted they pick something else. It was third time lucky when the name Canada 3000 was chosen and accepted on May the 10th. The livery, however, would remain the same, just with the new titles. During the naming debacle, a maple leaf was added to the tail in place of the word Air. Perhaps they were contemplating Maple Leaf 3000 as a possible alternative. Then again, nothing says Canada more than the maple leaf. Well, maybe hockey. With the arrival of their own metal, the Air 2000 aircraft returned to the UK, but come the winter season, 3 more would make their way over the Atlantic to join the Canada 3000 fleet. 1990 would see Canada 3000 introduce its first transatlantic flights from Toronto to Manchester, London Gatwick, Glasgow, Amsterdam and Dusseldorf. The airline was soon operating out of several bases across Canada including Toronto, Montreal, Ottawa and Vancouver. The Boeing 757 would form the backbone of the Canada 3000 fleet. It was the perfect fit for the airline as it was a jack of all trades. The 757 was capable of serving routes to Florida, the Caribbean and Mexico, as well as flights to Las Vegas and the newly introduced routes to Europe. While Canada 3000 were very keen on the 757, they would introduce the fly-by-wire Airbus A320 in 1993, with their first 2 being delivered in May and June respectively. The A320 had a smaller capacity than the 757, however this was used to the airline's advantage, as it could operate from smaller, less populated cities such as Edmonton, Ottawa, Winnipeg and Halifax. With the smaller capacity, the A320 was attractive to charter customers, as logically it could be easier to fill, so encouraged new routes to be tried out. An additional A320 would join the fleet in October, being brought in on a winter lease from the UK's Monarch Airlines, with Canada 3000 acquiring another one for itself the following April. The 757 fleet was growing at a steady pace too, with the airline taking delivery of one almost every year from 1990, 91, 92 and 95. By the early 90s, Canada 3000 cemented itself as the country's largest charter airline and had established a reputation for sterling service. While the drinks, snacks and headphones were chargeable like most other charter airlines, Canada 3000 explained that those would add extra costs which would inevitably be added to the airfare. The airline added that for them the key was to provide superior level of basic service and to offer good value in the price of extras. All of the food and beverage carts were what we call a half cart, which meant that passengers would be served face to face rather than from one crew member who would be working backwards. The in-flight magazine was also square rather than traditional A4. This meant that it could be taken out of the seat pocket without the need to wrestle it past the tray table. The customer comment cards were taken very seriously too, with all of them being studied by the airline's Director of Cabin Services, with the most notable complaints and comments being taken to the company president himself. In the mid-1990s, the UK's Owners Abroad group had undergone a few changes. Citing confusion about what their name meant, it rebranded itself to the much clearer First Choice Holidays. Air 2000 initially retained their classic livery, however they soon rolled out their new tapestry livery. Around this time, Canada 3000 toyed with the idea of changing their tail design. The Canada 3000 titles were replaced on the tail by C3, separated by a small maple leaf. C3 being the short and commonly used abbreviation for the airline. The two-letter identifier was apparently 2T, which harks back to its early days as Air 2000. The three-letter identifier was CMM, as MM in Roman numerals equates to millennium. We get Canada 1000. Oh, hang on. Incidentally, Air 2000 used the three-letter identifier AMM until they rebranded as First Choice Airways in 2004, but that's a totally different story. The C3 tail design was only worn by a single Boeing 757, lasting around 3 years before it was painted back into the older design. C3 would later be used as Canada 3000's premium class branding, Club C3. On the 23rd of October 1996, a Canada 3000 Boeing 757 departed Toronto for Manchester, England, and was notable as it was crewed entirely by women. Captain Nicole Sauvé and First Officer Linda Galipeu and their team are seen here posing by the aircraft before their flight. I recall reading about this in the news at the time and believe it may have been the first transatlantic flight operated by an all-female crew, but I have been unable to confirm that. In 1997, Canada 3000 showed us just how ambitious they were when they introduced a route from Vancouver to Sydney, Australia, not to be confused with Sydney, Nova Scotia. The flight would be operated by a Boeing 757 which had been specially reconfigured with 187 passenger seats in place of the usual 226. The flight would leave Vancouver for Sydney, making tech stops in Hawaii and Fiji, and technically it was a continuation of a flight from London via Toronto, and while it may seem daunting or perhaps cruel to fly from London to Australia via Canada on a 757, they were offering a far cheaper fare than any other carrier, at around £500 return. In May 1998, International Travel Holidays, which had been rebranded as Signature Vacations, announced that it was severing its partnership with Canada 3000 and moving on to a rival carrier, Royal. This move was sparked by Signature acquiring Royal Vacations, but was a massive blow to Canada 3000 as Signature accounted for nearly 70% of their business. The airline acted quickly, however, with the formation of its own in-house holidays division, Canada 3000 Holidays, and sold excess capacity to other tour operators including SunQuest, Sunflight and Conquest. A further side effect of Signature switching allegiances was that Air 2000 would now place their aircraft with Royal instead of Canada 3000, and that the airline would need to find a new partner to place its summer surplus with. A new partner was found in Flying Colours and their successor JMC Air. However, due to Canada 3000's own expansion, they didn't have that much of a surplus to worry about. It wasn't all doom and gloom though, as Canada 3000 became the world's first operator of the Airbus A330-200. The airline will take 4 of the new longer-range variants of the Airbus wide-bodied twinjet, with the first 2 arriving in summer 1998, a third scheduled for 1999 and the 4th coming in spring 2000. The introduction of the A330 allowed Canada 3000 to upgauge a number of routes, notably the Sydney flight, which in turn allowed the 757 to be deployed onto a new route to Auckland, where again the aircraft will be able to test the waters and see if it was a viable route. When first introduced, the Airbus A330 had a single-class cabin seating 340 passengers with 32 inches of seat pitch throughout. This was comparable to the established scheduled carriers, and this was a good thing considering what lay ahead for the airline. The year 2000 was a big one for Canada 3000 as it began the transition from a charter carrier to scheduled airline. This was because Canada's second largest airline, Canadian, was in the process of being acquired by Air Canada, and Canada 3000 wanted to seize this opportunity to take the number 2 spot. It shouldn't have been too much of a difficult move, as by this point approximately 80% of the airline's flight revenue came from the sale of seat-only tickets, with just 20% coming from seats sold with package holidays. It would need to make a few changes though, most notably the introduction of interlining and joining a global reservation system. Canada 3000 believed that it was uniquely positioned as a leading single-class reliable airline that was targeted at value-conscious travellers. Canada 3000 aimed to maintain one of the lowest cost structures within the airline industry through the high utilisation of its aircraft fleet. This in turn would allow the airline to keep ticket prices down and maintain its very high load factors. One other unnecessary cost which Canada 3000 had avoided was that of a frequent flyer programme, airport lounges and business class cabins, though these were all things that the scheduled competition was offering at the time. In the spring of 2000, the airline placed an order for 4 Airbus A319 aircraft. The A319 was the smaller sibling of the A320 and seated 142 passengers in an all-economy cabin. The first deliveries were penciled in for November 2001 and would allow the airline to increase the frequency of service on its North American scheduled route networks. Shortly after placing the order, the airline actually increased it to 9 aircraft and brought the delivery dates forward to October. To help fund these changes, Canada 3000 went public with an initial public offering which raised $30 million with its shares on offer at $10 each. October 2000 would see Canada 3000 awarded the rights to operate scheduled services to India. This was due to Air Canada axing all of their Indian routes earlier in the year. It wouldn't be until June 2001 when we would hear what the airline's plan would be, but let's not get ahead of ourselves. In January 2001 it was announced that Canada 3000 would be acquiring Royal in an all-stock deal worth around $82 million. The announcement was a surprise to some analysts, with one accusing Canada 3000 of pulling a bait-and-switch on its shareholders. Others believed that it was a good move, as Royal and Canada 3000 were a reasonably good fit, with Canada 3000 primarily operating international flights with just some domestic routes, and Royal having a very strong domestic presence in eastern Canada with very little overlap. It was estimated that the combined airline would have a revenue of over $1 billion, 4,000 employees, and a fleet of 35 aircraft. The Canada 3000 share price dropped 30 cents when the news broke and effectively shaved 3% off the value of the deal. Royal's share price rocketed by over $1 to close at $3.65, with Canada 3000 offering 1 share for every 2.5 shares of Royal. Royal wasn't the only acquisition though, as Canada 3000 snapped up CanJet, a recently established low-cost airline for around $7.5 million. The challenge now was to work on integrating these airlines and their fleet into Canada 3000. Neither airline had a fleet which particularly complemented that of Canada 3000. Royal had a couple of Boeing 757s, but other than that it had several ageing Boeing 737-200s and 4 Airbus A310 widebodies. CanJet had a small fleet of 737s, and Royal's cargo division had a handful of the old Boeings as well. The two fleets were soon repainted in either a hybrid or full Canada 3000 livery, with the A310s looking particularly smart. Another challenge was the different cabin configurations and standards of service. CanJet were purely a low-cost airline, and Royal were full service, complete with business-class cabins. Canada 3000 rectified this by standardising as much as it could when it introduced Club C3 fleet-wide in June. Club C3 offered wider seats with a 38-inch seat pitch, separate check-in lines, free advanced seat selection, a generous baggage allowance, gourmet meals and free booze. It marketed itself as the comfort of business class but for less, and in a way could be considered what premium economy is to other airlines today. In April 2001, Canada 3000 revealed its new plans for its domestic network, taking on board the integration of Royal and CanJet. Effective May the 1st, the airline would serve 21 cities across Canada, with domestic service between 69 city pairs. The airline would now offer a twice-daily service between New York and Vancouver, Calgary, Edmonton, Winnipeg and Toronto. A new daily service between Los Angeles and Vancouver, Calgary, Edmonton, Toronto, Montreal, Ottawa and Halifax was also introduced. The Toronto Triangle saw an increase in frequency too. In fact, Toronto would see 11 flights a day to Montreal, 7 to Ottawa, 5 to Calgary, 4 to Vancouver and 3 to Winnipeg. Canada 3000 was now serving over 100 destinations across the globe and had its sights firmly set on India. Using the rights it gained the year before, Canada 3000 announced a twice-weekly flight from Toronto to Delhi, with a once-weekly Vancouver to Delhi flight beginning later in the year. A twice-weekly service from Toronto to Mumbai was also planned for later in the year. This flight would use the existing Airbus A330 fleet, which had been reconfigured with 18 Club C3 seats and 309 economy seats, and go via London Gatwick. The flights to Delhi would use the polar route and require an aircraft with even longer legs. A brand new Airbus A340 would be leased from ILFC, picking up a delivery slot dropped by Sabena of Belgium. This aircraft would be fitted with 264 economy seats and 32 executive first seats. They didn't recline all the way into a bed, but were close enough. This aircraft was scheduled to arrive shortly before the first service began, but in the meantime Canada 3000 had started to develop some problems. In July 2001, the airline sold off a 50% stake in the former Royal Cargo division, since renamed as Canada 3000 Cargo. Flagship International Marketing acquired this stake for $10 million, payable over 2 years. That didn't really help much though, as something had gone seriously wrong somewhere. Michel Leblanc, the founder and former majority owner of Royal, who had previously taken the position of Canada 3000 vice chairman during the merger, left abruptly in July. At the time it was reportedly over a fairly minor disagreement, however it was clearly not the case, as Canada 3000 publicly announced that it was taking legal action against both Leblanc and Roland Blais, Royal's chief financial officer. The company was seeking $40 million in damages for fraud, negligence, breach of contract and conspiracy, with a further $5 million in punitive damages. Canada 3000 alleged that the two had conspired to overstate Royal's pre-tax profit and profit projections by over $20.2 million for the third and fourth quarters of fiscal 2001. They claimed it was done in order to entice Canada 3000 to make a move for Royal and to offer the highest possible price for the acquisition. Both Leblanc and Blais filed countersuits against Canada 3000 for defamation, but in the end none of the cases would make it to court. By August, Canada 3000 had written off around $25 million in Royal assets, most of which were in relation to the Royal aircraft fleet, as well as the value of the contract with Signature Vacations. Canada 3000 CFO Don Kennedy stated that they had a number of capital costs that, on amalgamating with us, we just don't feel have any ongoing value. We didn't really have access to the full information about Royal because we didn't actually own them yet, so we didn't do the full valuations of their assets. The lawsuit claimed that Leblanc had assured Canada 3000 that Royal was on course to make $12 million in annual profits for fiscal 2001. The airline added that Royal's true financial situation meant it could not possibly report that level of pre-tax profit in the given time frame. Canada 3000's chairman, John Leckie, said in an interview that, "We have made considerable progress in integrating Royal's operations with those of Canada 3000 and CanJet, but we are disappointed with some of the issues we were forced to deal with when we formally took over Royal." Adding that, while the prospects for Canada 3000 remain positive, this matter will negatively impact our short-term results. The Canada 3000 share price dropped to $7.80 at the news. Due to the ongoing debacle, Canada 3000's goodwill had jumped to over $82 million, and the airline had found itself in a bit of a tricky financial situation. It was later reported that come the start of August, Canada 3000 had $82 million in cash, but faced $106 million in liabilities. To put it another way, the airline had taken cash for 26 days worth of tickets, but only had the funds for 20 days of flying. Despite this, Canada 3000 plodded on. The airline had been profitable for all but 1 year of its 13-year existence, so it shouldn't have had any problem in securing a line of credit should it really need it. Things were looking up at Canada 3000. The airline was getting ready to receive its first brand new Airbus A340 and inaugurate the first non-stop service from North America to India. Bookings were strong. On September the 10th, the airline had one of its best ever days, selling around 25,000 tickets, but the following day would change all that. September 11th would hit Canada 3000 hard. The airline was grounded for several days due to the closure of airspace, and its bookings had plummeted. The week following the attacks saw Canada 3000 sell just 46,000 tickets. At the Canada 3000 AGM just days later on September 19th, the company reported a first quarter loss of $15.8 million. It was rather ironic that the shiny new Airbus A340 arrived on the same day as this shocking revelation, but things were looking up, as bookings had risen to around 63,000 that week. It seemed Lady Luck wasn't with the Canadian carrier, however, as just 1 day after the inaugural service to India departed, the US coalition began bombing Afghanistan. Unlike the $15 billion handed out in aid by the US government, the Canadians offered a paltry $160 million to be divided up amongst the airlines affected by the airspace closure. Canada 3000 will receive just $10 million of this. The airline's management tried to tell the authorities that the airline was in trouble and that $10 million wouldn't keep them afloat, but Ottawa wasn't listening. According to inside sources, it seemed that the authorities believed that Canada 3000 had enough cash to keep them going while they restructured. It was becoming increasingly clear to management that Canada 3000 might not make it through the winter and something needed to be done. On October the 15th, Chairman John Leckie pulled a move that I think even Gerald Ratner would have considered foolish when he told reporters that without help from authorities, Canada 3000 would be dead before Christmas. To say this caused quite a stir would be an understatement. Even the company's CEO, Angus Kinnear, hadn't been consulted about this. The Canadian authorities were quite rightly miffed, saying they were disappointed by the statements and felt that it went against their attempts to save the airline. The customers were not impressed either, with a lot clearly being scared away as bookings plummeted to 49,000. Airport authorities and suppliers around the world were now concerned too, as they were of course owed money by the airline, so they began plotting courses of action to secure any assets. Rather bizarrely, the only parties that were not ready to pull the plug were the aircraft leasing companies. Given that airlines around the world were suddenly cutting their fleet, they had the mentality that at least a late or partial payment from Canada 3000 would be better than nothing at all should they repossess them. Despite the financial problems, the airline's first Airbus A319 arrived towards the end of October, whilst the next two were almost ready over in Hamburg. On October the 24th, the Winnipeg Airports Authority held a meeting of its directors where they considered a proposal to seize one of Canada 3000's aeroplanes. This meeting was interrupted by a phone call from one of the senior officials at the Canadian Department of Transportation. They asked the airport to hold off seizing any assets for at least a week, and it looked like Canada 3000 may have found a reprieve. The following day, Transport Minister David Collenette announced a $75 million loan guarantee to help Canada 3000 out. Unfortunately, this rescue package came with several strings attached. The government demanded that investors inject $10 million into the airline as well as hand over 1/6 of the airline's shares. That $75 million loan would come with not just a commercial interest rate to the bank, but Ottawa itself wanted to take 6% in annual interest on it too. As that wasn't bad enough, the government wanted a viable business plan presented to them sharpish, showing how the management were going to return the airline to profitability. By November the 3rd, Canada 3000 was burning through its cash reserves at a rate of $700,000 a day, and it was clear that unless something drastic changed, the airline wasn't even going to make it to Christmas. Angus Kinnear approached the unions and Labour Board with a proposal to close down the Royal Division. He also informed them that it was the only option, and that if it was rejected then it was highly likely that Canada 3000 would have to cease operations. Despite the seriousness of the situation, the proposal was rejected, leaving the airline desperately looking for another option. Remarkably, the airline soldiered on. Fuel companies were threatening to cut the airline off, and caterers were demanding their outstanding bills be paid before loading flights up with meals. To those behind the scenes, the noose was tightening. On November the 7th, Winnipeg Airport won a court order to seize a Canada 3000 aircraft. The airline must have been tipped off, as the airport received an email from the airline's vice president asking them to hold on, as the government would have the loan paperwork completed in 2 days, and that the airport's outstanding bills would be paid in full. The airport decided to let a Toronto-bound flight leave with its passengers and crew unaware how close they came to being grounded. Over in merry old England, a Canada 3000 aircraft was seized upon arrival at London Gatwick. Fortunately, the aircraft wasn't due to depart until the following day, meaning the airline had time to scrape together the funds to pay its overdue bills, with the aircraft leaving as scheduled on November the 8th. Unfortunately, in aviation, news travels fast. Word was quickly spreading that the airline's aircraft were being seized, and this meant that creditors around the world began to plan on seizing assets themselves. The Canada 3000 board realised too late that it needed to file for court protection under the Companies Creditors Arrangement Act. The CCAA is very similar to Chapter 11 bankruptcy in the US. It forces creditors to back off and give the company breathing room while it restructures itself. Unfortunately for Canada 3000, by leaving the filing so late it had failed to enforce it in foreign jurisdictions, meaning overseas creditors would be able to seize aircraft when they land outside Canada. This was a huge problem, as in order to survive, the airline needed to keep its aircraft flying. Knowing that as soon as they landed somewhere outside Canada, they would most likely be seized, put a huge question mark over Canada 3000's survival plan. At 5 p.m. on November the 8th, Canada 3000 issued a press release announcing that the airline had secured court protection, would continue operating and was confident of its future. Angus Kinnear, the airline's CEO, apparently didn't authorise the statement and later said in an interview that it was becoming very obvious, as people were demanding money and seizing aircraft, that to send aircraft out and then have them seized, and God knows what else all over the place, we were not helping the situation. Things were going to get worse, not better. That evening, the board passed a motion which approved Kinnear's recommendation that the airline brought its aircraft back to Canada and then shut down. This news came as a shock to everyone, from the airports, the staff, the passengers, and even the airline's court-appointed accountancy firm. All were in the belief that the airline would be operating as normal. For creditors, the race was now on to seize whatever assets they could. Within hours of the airline's announcement, the entire Canada 3000 fleet was grounded, and after 2 more days of internal toing and froing as to whether they could resume flying, the board resigned and Canada 3000 was grounded permanently. So, what went wrong? The fall of Canada 3000 is an interesting one. The airline had been on the up and up, steadily growing, and with the exception of a blip in 1999 due to the loss of signature, had been profitable every full year that it had been operating. Canada 3000's problems came thick and fast, and it's fairly clear what they were. First was the acquisition of Royal, and the second was 9/11, though having one of the company's directors doing a ratner sure didn't help either. Canada 3000 acquired Royal in early 2001 and almost immediately showed signs that it had regretted it. The company began writing down Royal's assets, around $25 million worth in fact, from the aircraft to the value of various contracts, including that of Signature Vacations, who had switched from Canada 3000 to Royal years earlier. The company alleged that Royal had purposely inflated their figures and projections in order to lure Canada 3000 into acquiring them, and at a high price too. They went on to say there was no way Royal could have made the profit that they had predicted, and Royal's higher-ups must have known that. While Canada 3000's lawsuit and LeBlanc's countersuit never made it to court, enough information was in the press to show just how bad this deal seemed to be. The immediate effect of the write-downs was that Canada 3000's goodwill ballooned to over $82 million. Add to that their liabilities increased to $106 million, which was around $24 million more than the company had in available funds. Normally, this wouldn't have been such an issue if it wasn't for what was going to happen in September. The September 11th attacks forced the airspace in North America to be closed for several days. The airline obviously still incurred costs while its fleet was parked on the ground, and of course it would also have to refund tickets for flights which wouldn't operate. Unlike the $15 billion handed out by the US government, the Canadians offered just $160 million to be divided up amongst the airlines, and this was just to cover the costs associated with the closure of the airspace, rather than an attempt at stabilising the industry for what would lie ahead. When Canada 3000's plight became more apparent, Ottawa finally offered a rescue package with more strings on it than a marionette. Canada 3000's board didn't help themselves either. Not just when Leckie spoke to the press with his Christmas bombshell, which really knocked consumer confidence and rattled their creditors. What they really dropped the ball on was waiting until their back was well and truly up against the wall before applying for court protection. By leaving it so late, they had not only allowed their position to worsen, but also rushed through the proceedings and managed to omit that crucial protection from being applied overseas. That was the last straw. An airline can't operate without any of its aircraft, and given that its fleet would almost certainly be impounded if they left Canada, they had little option but to fold. The thing is, they even screwed that up. The confusion around that was something else. Just hours after a press release saying that they were okay and will continue to operate, they then say they're ceasing operations. Then it took another day before they decided that resuming operations wouldn't be possible and they were down for good. The way Canada 3000 collapsed will be looked at by business studies students for decades, how one of the country's most profitable and respected airlines fell from grace in a matter of months. For me, I believe the root cause of Canada 3000's demise was purely down to the acquisition of Royal. They'd not only overpaid on the acquisition, but almost immediately started writing down its assets. I honestly believe that had Canada 3000 not acquired Royal, they would have survived the aftermath of 9/11 with relative ease. I also believe that had they not acquired Royal, then Royal itself probably wouldn't have made it to September. The September 11th attacks and their aftermath, the unfortunate timing of their Indian services coinciding with the invasion of Afghanistan, and even John Leckie's PR howler were all things that were the finishing blows to an airline that had suddenly found itself struggling. And that, they say, is that. Or is it? Okay, I've gone on far too long, but following the demise of Canada 3000, there were several failed attempts at bringing the airline back. The most notable one was from a former investor who then went on to form USA 3000. The cargo division, Canada 3000 Cargo, was sold off and is still in operation today as Cargojet. CanJet somehow rose from the ashes as well and operated from 2002 until its demise in 2015. Royal's founder, Michel Leblanc, initially tried to buy back Royal but failed. He then went on to launch Jets Go, which lasted a whole 3 years before being abruptly shut down, and that is a story for another day. I hope the few of you that have actually made it this far have enjoyed this episode, and as always, thanks for watching.